All right, just about exactly 6 minutes until the closing bell on Wall Street, and the Dow still struggling to get to that 20,000 mark, but it hasn't really been long when you think about it. We still could very well set a record for the biggest or the quickest 1,000 point move in Dow history. Today's 20 sessions between 19 and 20,000. Doesn't look like we'll get it, but we'll see. Now, what's keeping us from getting there? What happens after maybe the Christmas holiday when trading picks up after New Year's? Let's bring in Reality Share CEO Eric Irvin is with us. IHT Wealth Management President Steve Dudash is also with us, and Portfolio Manager at Eaton Vance, the Multi-Sector Bond Strategies Fund, Henry Peabody. I'll start with you, Henry. The idea, and there was one statistic that we were looking at today, was put together that in the equity market, something like $3 trillion or something like that has been added, right, since the election, and the equivalent amount has come out of bonds, right?
We're seeing a bit of a pause here, more than likely because we're being held lower by the BOJ. They are really putting a ceiling on rates for the moment, but bear in mind, when you look back at the longer-term time horizon, we're really still at the lows in yield, both nominally and real, as well as the lows in volatility. So as much as this has been a sharp move higher, we're still pretty low in the grand scheme of things.
Well, Eric, let me go to you with Henry's point about a good time to be an active manager. Now, trust me, I understand when talking to guys on Wall Street that have an interest in being active managers. That's something that we've been told a lot. But maybe this is more true now than it is at other times. Do you agree with that? And tell us what you make of the environment.
Yeah, I think it's a very valid point, either to be active or to be tactical. That's I think the key point. So you can still be tactical with indexes in order to get the exposures that you're looking for, such as high quality stocks or kind of a limited duration type in a bond portfolio. But the key is not necessarily from a active is going to solve all problems, because active can also get you into a whole lot of hot water if you make the wrong choices and wrong decisions.
Steve, Dow down by 20 points right now. Steve, let me ask you about the political environment a little bit. I mean, we were talking earlier, Charlie Gasparito was on, about the Boeing CEO and his comments coming out of Mar-a-Lago, and now, from what I understand, the Lockheed Martin CEO is just going in to meet with Donald Trump. A lot of this rally, the underpinnings of it, have been this optimism that there is a new attitude towards business. At the same time, this president-elect has been confrontational against, in dealing with certain businesses. What do you make of it?
Okay, so when we're dealing with our clients' money or we're on these kind of shows, you don't always say what's the most popular thing to say. In January, when energy prices were getting crushed, we were saying the math does not work for $25 a barrel oil. And we were right. It was the best sector you could be in. A couple months later, when the fear trade was big and everyone's saying buy gold, we were saying the math does not work. Gold should not be valued where it is, and it's been the worst sector you can be in. Unfortunately, what's going on right now, the math does not work. And I hope I'm wrong about this, but we owe a lot of money. Interest rates are going up. We're going to have to pay higher debt because of that. The dollar's getting stronger, which means these big multinationals that are driving the Dow up right now, as high as they're getting, they're going to make fundamentally less money. So all of this is on the hope and the hype that's going around with the Trump trade right now, and that is that lower regulation, lower taxes are going to prop it up. And I'm sorry, but the math does not justify those two components.
Let me bring it back to Henry, because that's interesting, because that does bring a kind of a counter to what a lot of people have been telling us on, Henry, the Trump trade, right? And this idea, as I said, that there is added optimism. Is it hope? Is it hype? How do you view what we've seen here since the election and what we might see next year?
You know, there's certainly some positives, and I think it's hard to argue that deregulation and lower taxes are generally positives. All that said, I agree with the prior guest in that the consensus has been reached entirely too quickly. We've had a year's worth of return in the equity markets in a month. Rates are far higher, and there's still a lot to be determined. We don't know exactly what policy will look like, when the rubber will hit the road, to the degree that what size it will be. And also, the point about the dollar is very well taken. The dollar is darn close to a high on a real effective exchange rate basis. So it's getting to the point where it's stretched, and any further, you'd start to get worried about dollar debt globally. And so these are some major concerns. Nobody wants to see the dollar much stronger, which leaves a very fine line for a Trump-led Federal Reserve to walk.
There you go, Eric. Those are the concerns, right? I mean, are they valid in your mind that maybe we are getting ahead of ourselves a little bit, and these moves in some asset classes, including currency, should be concerning? What's your take?
Yeah, let's face it, corrections happen. Markets go up, but markets also come down. No market has gone up as a a straight line. So as we look at it, markets have to be fluid, and you have to think about them with fluidity. So from a fundamental perspective, I think the Trump policies, many of them are pro-business and very good to the bottom line of companies. We haven't seen a whole lot of earnings growth over the past couple of years. Now actually is time for that earnings growth to possibly come in. But then on the flip side, we have nearly 5 sectors that have really broken down in terms of added volatility and just price breakdowns. So
Henry and Steve and Eric, thanks to all of you. You hear the bell ringing on Wall Street. Looks like we'll leave ourselves 55 points or so on the table for tomorrow as the markets move lower into the closing bell. It's David Aspen and Lauren Simonetti picking it up after the bell.